To keep you updated on the capital and financial markets, here is a recap of what happened.
Various surveys and tests have been conducted to determine the financial literacy level of the UK population. Despite differing methods and quantities of people surveyed, the numbers paint a similar picture. The UK is mostly financially illiterate, and the problem is worse among the younger generation, with 26% of those aged 18 to 24 seeking financial advice from TikTok. The scene isn't much better in the 55-plus demographic, where 36% obtain the majority of their financial education from TV shows. Financial literacy is important not just to financial institutions, as this impacts everything from consumer spending to retirement to healthcare. When consumers are more financially literate, they often have greater spending power and engage with businesses more sustainably. Several Indian asset managers said they are moving, or planning to move, some offshore fund business from financial centers such as Dubai and Singapore to a finance hub in the western state of Gujarat to gain better access to India's capital markets. The Indian government is promoting the Gujarat International Finance Tech City, or GIFT City, as a gateway for global capital and financial services for the economy and is trying to attract companies through tax breaks and other incentives. In the last 6 months, about 8 of the 10 biggest Indian asset managers by assets have either relocated their business, or set up new funds or filed for permits to move to GIFT City, according to executives at these funds. Malaysian debt capital market issuance will rise in 2024 due to issues funding diversification and refinancing needs, according to an international rating agency. In a report released on the 14th of February, Fitch Ratings said it expected the Sukuk and Ringgit to stay dominant. The government's 2024 budget, which is still slightly expansionary, will drive growth, with the authorities planning several development initiatives guided by the Ekonomi Madani framework, it said. China will have to do more to convince stock investors about the sustainability of the market rally spurred by recent rescue measures after some $5 trillion of value had been erased over the past 3 years, according to fund managers. The measures aimed at propping up stocks alone are insufficient to sustain the rally that has led to the recovery of a combined $377 billion of capitalization on markets in the mainland and Hong Kong last week, according to Pictet Asset Management and Saxo Market. Investors will shift their focus to the economy and corporate earnings after the excitement about these bailout measures fades, they said. The Federation of Investment Managers Malaysia has reprimanded 12 former unit trust scheme and/or private retirement scheme consultants for their misconducts, breaches of FIMM's consolidated rules. These public reprimands are imposed to send a strong message that FIMM will take action against those who fail to comply with any rules issued by FIMM. This is to deter UTS and/or PRS consultants from committing any misconduct and reminding them that it is crucial to observe FIMM's rules when marketing and distributing UTS and/or PRS in Malaysia to protect the interests of the investing public.
The latest e-Zine is now available for download at FIMM's official website. Download your copy today to keep up to date with what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.